It's March 31st, midnight. Monday's trading day was a great day actually. I didn't take any trade, practiced contentment, patience, and no emotions. I nicely was just looking at it, tape reading it, very good. And market was just unfolding itself. It was so good. It was just like a love story, man. I mean, who want a girl if they have Nasdaq? But again, it's just a business. We're not trying to marry this. It's just a business. We're here to make money. No love making here. So I didn't do the review. I'm just gonna do it alongside. First presented fair value gap Monday, 31st March. Alright then. Market opens here. It just drops lower because we already had taken these equal highs above our market's opening price here, and then it just drops lower. To what level? To what level? Let me check. Well, it's not a coincidence. Look at the breach of consequent encouragement, and look at this. Just look at this. How beautiful it is. Damn. Don't tell me that. Don't. So I saw one of the ICD's videos, and he talked about these volume imbalances and the bodies inside it. If we have a small body inside a volume imbalance, we just consider the body in the volume imbalance, and we just use the lowest of the volume imbalance and highest of it, including the bodies, and look at that. That's not a coincidence. That's algorithm, and it just proves itself every day, every minute, unless it's news time. Okay, so it just drops lower and then climbs higher. To what level? To what level? We had the new week opening gap. We had this fair value gap, and this candle's eye, consequent encouragement of this week. Let's see 4 hour. There's a balanced price range. That's a balanced price range. We have up and down move there. Market can always retest it, but I'm more confident about this one, this thing. Oh, this week's longer. It just rejects the lower quadrant of it. Makes sense. Not exactly, but it's good. So on 1 minute, we're back again. Market just takes out the equal highs, drops lower after the open. Didn't even try to fill the opening range gap, but ES actually fills the lower quadrant of it. So ES was showing the strength signs. Retest first presented fair value gap, then do a little retracement there. That would have been the entry at this. That's the breaker. That would have been the entry. Extend right, background orange. Here, that would have been the entry. Retest there. Damn. Holy shit. Oh, from here. The fuck. Yeah, from there. We easily could have gotten like 50 handles there, because around that area when Nasdaq was like trying hard to go lower, making a lot of wicks, actually ES was just filling its first presented fair value gap and was respecting it. So there we knew like Nasdaq's gonna return back up, because that was the first presented fair value gap. Market drops lower. So what did Nasdaq do? Nasdaq just rejected this from here, but S&P actually takes out the equal highs, come back into it, making an inverse fair value gap. All the wicks, even the bodies, staying inside it. Look at that. That was a clear indication that Nasdaq's not gonna go any lower, because ES was respecting that first presented fair value gap. So that would have been the exit, or that would have been a partial candidate, and the soft would have been moved to break even. So we have another breaker there, the up close candle. That's the breaker. That's the breaker. Or just I'm trying to find a clear breaker for you guys. I think that's a good one. Yeah, making a swing high, going lower, breaking the swing high, and then retesting that swing high. That would have been a nice partial candidate there. Okay, so after that it just climbs higher, and we have another breaker there. Up close candle, swing high, broken, and that becomes a breaker. Yes, now after like shooting ups to the upside, we have opening range gap just starting here. We have opening range gap low here, because market just opens here and it was a lower gap, like a big low gap. So we're just rejecting the low of it, as ES was already inside the gap, and we had this breaker getting respected again and again. Even look at the aggressive rejection from it, and look at the bodies staying inside that fair value gap. And once market explored first presented fair value gap, done. We're going up. It just climbs higher and higher and higher. Look at that, at around 1150 and 1210 macro, market just do a retracement but fails to take that low. So making higher highs, higher lows is a clear indication that it's just gonna go higher. Explores new week opening gap, Friday and Sunday's gap, eventually coming here. And then it just retraces at the close. Well, that's what the close macro does. It just go to the other side of the liquidity to take out the positions that take out the obvious positions, and we had obvious long positions in the market, so it just takes them out. It just starts around 350, the close macro. Look at the reactions around 350. Up close candle, down, up, down, up, down. Then it just drops lower back into new week opening gap and some of our equal lows there. This is all sell side. This is all stops for the longs. And at the close, what it does, it just comes back down. Not exactly at close, but later on it just comes back down and take them out. Then again, it just retraces. Oh, well. the structure it shows, it's bullish. It's bullish. 5 minutes. So there's a prophecy, it's gonna go higher even more tomorrow. Market down. Couldn't be better. So London, what's London gonna do? Market just new midnight open there. Taking the high. London just gonna rip higher. Or if London drops lower and takes this low. Oh, actually, that's a balanced price range here. That's interesting. That's an interesting level for me. Also, new week opening gaps low. I want London to explore here and then rip higher. Maybe retrace in the pre-market, and I just want the market to go up tomorrow. That's it. Up to what levels? I don't know. We'll see tomorrow. But at least this fair value gap. At least this fair value gap. Because right now I don't see any weakness there, but it could change obviously. But until now, what the price action is showing me, it's clearly an uptrend, but I could change. My bias could change tomorrow. I have to watch London, I have to watch pre-market, and if it's different, I'll just switch my bias, but for now I'm interested in longs. London's walking up. I hate London. Even if I wake up at 2 a.m., 3 a.m., it never gives me any move. I just have to be in, like, I just have to like struggle in the consolidations of London, and it just gives move around like 5, 6 a.m. and I'll be done blowing my account. So 10 a.m. we have a high impact news. That's a good signal. We have a CPI that's gonna move price because it's London. 5 a.m. London close is gonna definitely move price. Interesting. So that's everything. Peace. Actually, it's just going higher. If London takes this buy side, it looks like it's gonna take buy side, but I really want it to. Actually, after opening, it's just we have some equal lows there. Damn, we already swept it. If it takes this buy side and continues ripping higher, I don't want to see that. I don't want to see big moves in London. I just want consolidations and slow moves, and then pre-market will set the premises for our New York. And I want to see the price explore this fair value gap, 19,632, and right now the price is at 375, almost 300 handles. It's nothing for it. If each candle is like more than 100 candles in 1 hour, it's easy. But London, look at 1 hour, bro. Damn, I think London's gonna just take this high, because in 4 hour we still have an hour in this candle, and this candle will set the premise for London also. Like, this candle will finish doing its stuff, there will be a 10 p.m. candle, 4 hour, and then London will sweep one of the levels. And after sweeping that, whatever the candle is, if it sweeps low of it and the candle's green, then we want to expect another green candle in the pre-market. Then New York can do retracement and rip higher. We'll see tomorrow. Peace.